Hello everyone, welcome to EduTap. So in today's session, we are going to discuss a very important finance news article regarding the Reserve Bank of India that has given a big shock, a big surprise to the market, and that is by doing the off-cycle monetary policy committee meeting in May. So why was this a big surprise? Because see what happened that in April 2022, the bi-monthly monetary policy committee meeting was held, and after that, like the schedule was there that after April the meeting will be held on June 2022 of the monetary policy committee, and after that in August. So there was a complete schedule that came for the monetary policy committee meetings, but surprisingly the MPC, that is the monetary policy committee meeting, was held in May. That is the off-cycle monetary policy committee meeting that was held. It was a big surprise for the market, and major decisions, big decisions were taken in this monetary policy committee meeting. So we will understand that what were the big decisions, why the decisions were taken, and why this monetary policy committee meeting was held in May. So now before starting with the session, please subscribe to our YouTube channel if you are new to the channel, and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So now starting with the news article, that is the Reserve Bank of India has raised the policy rate at surprise monetary policy committee meeting that was unscheduled, or we can say off-cycle meeting that was there. It was not scheduled. The meeting should be held in April, and after that it should be held in June, but the meeting was held in May. After April, the meeting was held in May. That was an off-cycle meeting. Okay, and in this meeting, the big decisions that were taken were, the first one was repo rate was increased. The Reserve Bank of India governor announced in the statement that the monetary policy committee has voted unanimously to the 6 members of the monetary policy committee, the 3 members from the Reserve Bank of India and the 3 members from the government have unanimously decided to increase the repo rate from 4%. The 4% was decided in April 2022. That was continuing from the past time and from previous many months. But now the monetary policy committee in the May has decided that this repo rate will be increased from 4% to 4.40%, that is 40 basis point. Okay, and with the immediate effect. So the monetary policy committee in May has increased the repo rate from 4% to the 4.40%. What will be the effect of this? Why this has been done? So this has been done because there was persistent inflationary pressure in the economy. Continuous pressure was there in the economy, and so this repo rate was increased. See, repo rate is the borrowing rate for the banks. At the repo rate, the banks borrow from the RBI. From the Reserve Bank of India, the banks borrow. So now this rate has been increased. The borrowing rate has been increased. So now the banks will get the loan at higher rate from the RBI. So now if the banks are getting the loans at higher rate, they will also give loans at higher rate to the customers. So the cost of borrowing, for the customers will increase for the loans. Okay. So the loans, the customer will get the loans at higher interest rate because the repo rate has increased. So now if they are getting the loans at higher interest rate, why will they want to borrow too much? So it is expected that the loans borrowing will go less. Okay, the loans will be taken less because the cost of borrowing is higher now, the interest rate is higher now. So when the loans will be taken less, what will happen? Now that money would have gone to buy the car, to buy the house or something. So the demand in the market will also go less. When the loans go less, when the demand in the market go less, the price will come down. The persistent inflationary pressure that is in the economy might go down. So that's why, and this is the repo rate is the most effective thing with the tools of the RBI that the RBI has. So that's why the repo rate has been increased, and this is RBI's first increase in the borrowing rate in the repo rate since August 2018. So this is the first increase in the repo rate, and as well as there is one other big step that is taken by the RBI, that is to increase the CRR from 4%. Currently the CRR is the 4%. And what is CRR first of all? That is the cash reserve ratio, that is the percentage of NDTL, of the net demand and time liabilities. Okay, so what is this? We give money to the banks to deposit. Either it is demand deposit or time deposits. Like demand deposits that we can take out at any time. Time liabilities, time deposits that we are giving are the FD, RD. So these are the total net demand and time liabilities of the bank, because the deposits the bank has to return, and that's why it is bank's liabilities. Okay, so the net demand and time liabilities means the total deposits we are doing with the bank. So the percentage of the deposits, the percentage, this percentage is the CRR the bank have to keep with the RBI. Okay, so it was 4%. 4% of this the bank has to keep with the RBI, but now the RBI has said that from May 21st, 2022, this percentage will be increased by 50 basis point. That is from now onwards, from the May 21, it will be 4.5% rather than the 4%. And due to this, what will happen? That is, the liquidity in the economy will be reduced to an extent. The withdrawal of liquidity through this increase in the CRR would be of the order of rupees 87,000 crore. This has been said by the Reserve Bank of India's Governor Shaktikanta Das. He has said that approximately will be getting rupees 87,000 crore taken out of the system of the economy by increasing the CRR by 50 basis point. So you can see that now in the CRR, what the banks are doing, they are keeping their money with the RBI. So they won't be able to give that money, that 4.5%, that 0.5% they won't be able to give as the loan. So that money will be, liquidity will be going out of the system. Okay, the banks will not be able to circulate that money through the loan. So that's why the CRR has been increased from 4% to the 4.5%. Okay, and you can see that due to the less liquidity, the excess liquidity is taken out of the system. Due to the less liquidity, the demand will go down, okay, of the unnecessary things, or too much money is in the hands of the people, too much money is in the system. So that will be reduced, and so the demand will be reduced to an extent so that the prices can go down. That is, the persistent inflation that is in our country can go down to some extent. Now let's see the why this persistent inflation is there. Let's see that. So RBI is taking all the steps to decrease this inflation by increasing the repo rate, by increasing the CRR rate. So why this inflation is there? First, what is the percentage of the inflation? Okay, so this is, in January it was 6.01%. January 2022, in February it was 6.07%, and in March 2022 it was 6.95%. And as you must know that there is a tolerance level of the RBI. Okay, it is around 4%. RBI wants the inflation to be around 4%, and there is plus 2%, that is 6%, this is the upper limit, and 2% is the lower limit. RBI do not want the inflation to go above 6%, but as you can see from the data, that is, the level of the inflation is breaching the RBI's comfort level of 6% for the third consecutive month. So for the 3 consecutive months, it has breached the upper limit of the tolerance level, and it is expected that in April the data will be, the inflation, the retail inflation, headline inflation will be near to 7%. Okay, it will be above 7% even for the April. The April data will be come out in May. Okay, in mid-May. So 9 out of, as well as this inflation is there. Now this inflation is because of the food inflation that is there. 9 out of 12 food subgroups registered an increase in inflation in the month of March. Indicators indicate that this will be persisted. The food price pressure will be even in the April. Okay, when the data will come, we will see that the inflation has persisted in April also. So as I told you, the inflation kept on growing in the past 3 months, and it was above the 6% tolerance level. Okay, it was above the upper limit of the 6%, and that's why the RBI had to take the big step of increasing the repo rate and increasing the CRR also. So economics expect that the price pressures to surge further in the upcoming months also, that the price pressure will not go down, it will continue for the coming months. And why the MPC meet was held in such haste was because, see, for the 3 months we have seen higher inflation. Okay, and it is, you can see the percentage is keeping on growing, and we are expecting in April the inflation will further go down above 7% also. So when you see the growing inflation, you expect that for the next month, for the April, for the May also, maybe it will be 7.9%, 7.8%. So when we have the expectation of the inflation that it will go above only, What we will do that at current period of time, we think that okay, right now prices are not that much high, we should stock our products in our houses, we should stock the useful material in our houses. So we will demand at current period because we expect that in the future the prices will go further up. So we start demanding more and more, we start stocking in our houses, so the demand at the current period start rising. Due to this, inflation will further rise. So the expectation is pushing the inflation in the real period. You can see this is the spiral that is there. That is the expectation of higher inflation is there. That expectation is boosting demand in the current period. The demand is boosting inflation in the further period, the prices continuously. So this will create a spiral of inflation. And that's why to break that spiral in haste, in like current period, the spiral needed to be broken. And that's why RBI had to take the decision in a fast manner. So before the data for the April comes, the RBI has already came out with the decision to increase the repo rate to show the country that we are now trying to reduce the inflation at anyhow. That is the inference we can draw, because the RBI is saying that we are withdrawing the accommodative stance. This has been said by the RBI's governor. So we can expect that the RBI will focus on inflation, and now we can see that the spiral will be broken. We should not expect continuous growth in the inflation. So that's why it was in the May that the Monetary Policy Committee came and met in the haste, we can say, so that this spiral can be broken. Next is, see, inflation. The RBI governor said that due to the geopolitical tensions forcing inflation higher in major economies, the crude oil price is very volatile. It is above $100 per barrel, and due to the geopolitical conditions, even India is not immune to the global conditions. So the Ukraine-Russia war that is there, that is negative global conditions are pushing India towards higher inflation. So India cannot be immune, and RBI is taking as much a step as it can to decrease the inflation. Risk of input cost pressure is also there. That is also why the inflation will go high, or inflation is going high, because when the input prices, when the input in the product, that is the cost of production, the cost of raw material is going high, then the output prices will also go high. So risk of input cost pressure is there. This is promoting another round of rise in prices. Edible oil shortage is there due to the Europe conflict. So due to all of this, the persistent inflation was in the economy due to the food price rise, due to the edible oil shortage. Crude oil prices are high. They are very volatile also. The input cost is getting the pressure, and due to that the output cost will get the pressure. All of these were boosting the inflation, and now RBI is trying to reduce that inflation. So this is the summary kind of thing that RBI said that withdrawal of accommodative stance will be there. And the RBI decides to remain accommodative for now. It is trying to take growth with the inflation, but inflation is the priority now. Okay, that's why they are focusing on withdrawing the accommodation. Now in the outlook of the April 2022 also, they said that we are trying to put inflation above growth, and they have said in this also that we are withdrawing accommodation. Inflation expected to rule at elevated levels. It will continue, so we have to take important measures. Jump in fertilizer prices were also there, and other input costs. I told you that the input costs are rising. The cost of production is rising somehow. Input cost is what? Raw material. So fertilizers are a raw material for the crops now. So fertilizer prices and other input cost has direct impact on the food prices. Next meeting of the MPC will be as per the schedule in June. It will be held. And now the loan price, as I told you that the banks will get the loan from the RBI at higher rates. So the bank will give the loan to the people at higher rate also. So the EMIs on home, auto and personal loans to go up. Okay, CRR hike by 50 basis points, and this will lead to 87,000 crore to be sucked out of the system. Corporate loans to turn costly, because now the banks are getting that higher repo rate, so they will provide the loans at higher interest rate also. So the corporate loans will also get higher. Okay, so this is what the focus on strengthening growth with reducing the inflation. If the inflation continue on growing, you can't grow. you cannot have the growth into the economy. So first, inflation should be the focus to reduce the inflation, because the common people will be hurt by the inflation, especially the food prices are rising very much. So next is Central Board of the RBI approved the nomination, as well as Rajiv Ranjan was a part of the Monetary Policy Committee, and Ranjan has replaced Mridul Sagar. Okay, he was a part of Monetary Policy Committee that sat in May 2022. Okay, so he has replaced Mridul Sagar. So I have told you about the repo rate that has gone to 4.40%. If you know the LAF corridor, you know that SDF is at the lower point and the MSF is at the upper limit. And now if the repo rate is 4.40%, the SDF is minus 0.25, MSF is plus 0.25. So SDF will be 4.15% and the MSF will be 4.65%. Okay. So this is, you can see MSF, SDF. Okay, if the repo rate has been changed, the SDF, that is the deposit rate, has also been increased. So when you are taking loan at higher rate, you can also deposit at higher rate, and deposit rate will be 4.15%, that is 0.525% lower than the repo rate, and the marginal standing facility rate, that is the emergency, in the emergency situation you can take loan, that is 4.65%, that is plus 0.25% from the repo rate. Okay, so this is all, and the CRR for now is 4%, but from May 21, 2022, it will be 4.5%. The CRR will be 4.5%. Okay, so I hope you will remember all of this. Very easy to remember SDF and MSF if you know the repo rate. Okay, minus 0.25% plus 0.25%. Okay. So next is assessment of the domestic economy has also came brought by the RBI, that the urban demand has appeared stronger after the pandemic, but there is weaker demand from the rural side, as well as investment activity seems to be gaining traction, has been gaining strength, and that's why also we can say the inflation was there, as there was much investment that was happening. Okay, there was much mercantile export, or we can say good exports that were happening, the export of the goods that was happening, and that recorded double-digit expansion for the 14th consecutive month in April 2022. So you can see too much export is happening. When too much export is happening, the demand of our commodities are higher. Due to that also prices are rising. Okay. Non-oil, non-gold imports also grew. It is not like we are only exporting, we are importing also too much. Non-oil, non-gold imports also grew robustly on the back of the improving domestic demand after the COVID-19. Overall system liquidity remained in large surplus. There was too much liquidity into the economy. Okay, foreign exchange reserves declined, and you can see that also. So this was the domestic economic condition. You can see the CPI inflation surged to 6.95%, that is near to 7% in March, and 6.07% it was in February. So this was the data. Now the global economic condition has been shown by the World Economic Outlook, by the International Monetary Fund, and the RBI has discussed about it, that how since the MPC's meeting in April 2022, there were disruptions, shortages, escalating prices due to the Russia-Ukraine war, due to the global condition. There was too much disruption that was happening due to the geopolitical tensions. The IMF has revised down its forecast of global output to 3.6% in April 2022. The data through the World Economic Outlook is there, that is saying that 3.6% will be the global output growth, or global growth we can say. Okay, it will be 3.6%. And in January it was higher by 0.8%. In January it was expected that it will be higher, but now in April the data has shown that it will be 3.6%. It is expected to be 3.6%. The World Trade Organization has scaled down the projection of world trade growth for 2022 to 3.0%. Okay, so the World Trade Organization, the IMF, both are reducing their percentages of the growth, because there is too much geopolitical tension, too much disruptions that are happening, due to which it is expected that the growth in the economy, in the world economy, will be slowed down. Not only India is impacted, most of the countries are getting impacted by this geopolitical tensions, by this rising inflation. I hope you have understood about it and you will remember this data, very important. 3.6% global output growth that is forecasted by the IMF in the World Economic Outlook. World Trade Organization is expecting world trade growth to be 3.0%. So these are the questions for your practice. I hope you can easily answer these questions now. And this is the other question. Both of the questions are for your practice. Thank you very much. I hope you have understood today's session, and if you have any query, you can mail us here or you can contact us through this number. Thank you very much.